My name's James Thom. I'm a fund manager with the Aberdeen Asian Equities team based in Singapore. When we think about the merger, we see it as an opportune time to be merging these two leading Asian investment trusts. There's a clear trend in the investment trust industry at the moment towards larger, more liquid vehicles, and that's exactly what this merger will achieve. It'll create an entity of significantly larger scale, and with that, all the benefits of scale and the economies of scale will come through in terms of lower ongoing charge ratios, the liquidity of the shares will increase, and overall the profile will be much enhanced, and that should help broaden the interest in the trust. We'll also see the management fee decline. So it makes a lot of sense financially, and it also fits with the trends we're seeing in the overall industry at this point in time.
Hi, I'm Pruksa, and I work with James on the Asian Equities team as well. And the short answer to the change in investment mandate is no. What we have catered to allow us to have greater geographic flexibility, and that allow us to basically invest in Australasia, and that allow us to have a more diversification with regard to geographic diversification as well as sectoral diversification. In terms of investment philosophy, it is still very much bottom-up, quality-based. There's no change in that.
When you compare and contrast the two portfolios, so Asia Dragon and New Dawn, on first glance it looks like they are quite different, and it appears like approximately a third or so of the portfolio is different. But in practice and reality, it's not that material in terms of differences. And I say that because a large part of the difference relates to how the two trusts invest in the India market. In the case of Asia Dragon, the investment is directly into Indian stocks, whereas Aberdeen New Dawn currently gets its exposure to the Indian market indirectly through investing in India funds. So that's one key difference, and that will fall away with the merger, with the intention to invest directly in India. Another key difference is New Dawn's exposure to Australia, where it holds several Australian stocks, and Asia Dragon currently doesn't have that exposure, but post-merger, as Pruksa just explained, the investment policy will be tweaked slightly to allow the enlarged vehicle to invest in Australasia and give that additional benefit, so that difference drops away. And then there are really only a handful of stocks held in the New Dawn portfolio that aren't held in the Asia Dragon portfolio. So that's why I say in reality the differences aren't all that material. And there's another reason why, frankly, it makes sense to combine the two portfolios. There's a logic to that.
So James and I are going to be the co-managers of the investment trust, and as you know, we are backed by more than 40 strong team members within the Asia Pacific region, and generally what that means is that we will be harnessing the wisdom and the research that's generated by our colleagues around the region to construct the portfolio. So no real change to that, and James and I have been working together for more than 10 years. So very much comfortable with each other in terms of the style, and we will have our usual healthy debate.
The philosophy when it comes to gearing is very similar across the two trusts. So on the combined vehicle, that same philosophy will apply. And really that is simply that we are believers in the use of gearing and see it as one of the key benefits of the closed-end investment trust fund structure. But we're also conservative users of gearing. We are aware that we're investing in emerging economies and stocks, and therefore we think a prudent use of gearing is appropriate. And by that I mean typically sort of single percent type of net gearing percentages, and for the merged and combined entity, gearing will be capped in terms of policy at 20%. So that's so I think really we won't see a dramatic change in gearing, but we will continue to use gearing.
So the enlarged trust will have about 8 directors in total. 5 will be from Asia Dragon Trust and 3 will be from New Dawn. We will go through a 6 months transition period, and that 8 number would reduce to 5, and the split would be 3 from Asia Dragon Trust existing members and 2 from New Dawn.
When it comes to the timeline of the merger process, as I'm sure you'll appreciate, that's still work in progress. There's a lot of legal and regulatory details to be worked out, and of course the merger will be subject to shareholder approvals of both investment trusts. So those meetings need to be scheduled and votes put through. So it will take a little bit of time. We're currently targeting to have that done by November or in November. And then from that point, in terms of the nuts and bolts of putting the two portfolios together and merging the holdings, we expect to be able to do that pretty quickly. So I think, practically speaking, we would think that we would have this all done by the year end. Turning to performance, and to give you a brief update there, I think it's fair to say that performance year to date has been somewhat disappointing. We are lagging behind our relevant benchmark. And really, when you drill into the performance attributions, you'll see that that's really a function of stock selection within China, which we haven't quite got right over the course of this year. And of course, China's been a very volatile and tricky market to navigate. We've all seen the headlines around slowing growth and troubles in the property sector, all the geopolitical headwinds, and that's just made for a very, as I say, a very volatile investment environment. We've done our best to navigate through that, but some of our consumer holdings have been negatively impacted in the short term. But we're long-term investors, and we're focusing on quality companies that can weather through these sort of near-term turbulence. And so that's where our focus is. We're making sure that the companies we're invested in remain high quality, continue to have strong market positions, and have the cash generation and balance sheet strength to weather the volatility. And we're comfortable and confident that that is the case. So yes, tough in the short term, and clearly the China sort of macro backdrop is a challenging one, but we're confident and comfortable in the companies, and really the focus has to be on that and ensuring that we've got better and good visibility on the nearer term earnings, and that's what both Pruksa and I are focusing our time on at this point.